Hey, good morning. It's Robin Bauer from the real estate agency. And today we have our special guest, Steve Stemick from First Option. Welcome, Steve.
Hello, Robin. Is this how this works? Can you hear me? Sorry, I had to do some Talladega Nights.
We're gonna get a little comedy today with our with our guest today, Steve Stemick from First Option Mortgage. Today we are going to talk about rates. So a lot of times, just when I'm out and about in the public, or if I'm with family functions, or even when I'm talking on the phone with past or current clients, they're constantly asking me, when are these rates going to drop and what are the Feds going to do? So I thought what a good idea would be to have an expert to come in here and talk to us about when are these rates going to drop, Steve? What are the Feds going to do? So take it away.
Yeah. Thanks for the softball question. And I'm sorry about your family get-togethers where you guys talk about rates. Anyway, I think everybody thinks in terms of rates. So I'll answer that question directly right off the bat. We don't know. There's another meeting coming up here September 18th where the Fed's going to meet again, and they have their monthly meetings. I think rates did just drop as far as the mortgage rates in the last month. So we've already seen a pretty decent drop from summertime where they're in the mid sevens, mostly now down to mid sixes. So already a big drop in rates. So I think what we're seeing right now, always my opinion, anyone that speculates in this business, we don't know. We can only go off of what's happened in the past and, what we're looking for in the future. And yeah, we're always watching everything. But honestly, I think they're already baked in right now. Okay. So I think the rate drop just now happened, or baked in thinking that as the Fed keeps, if you're reading the news or listening to the news, they're talking about how rates could keep dropping. I think that's already baked in. Now, could we see more rate drops by the end of the year in mortgage? Sure. Maybe not. I don't know. The thing is, I think what I always have to ask clients, and as I'm talking, like I said, we don't have that as a family discussion, thank God, is
around the Thanksgiving table, when are the rates going to drop, Steve?
Yeah. I'm leaving. I'm going and playing cornhole or something. So at that point, it's what's the cost of waiting? Because when I look at home purchasing, why does someone buy a home? Honestly, one, it's a need. You need shelter, and the rest kind of comes down to want. What do you want? And when you're talking rates, you're talking about a product, or I guess your home, which is, and it's funny how we talk about rates with that. We don't talk about rates on a lot of other things that we purchase. That's something that typically is going to appreciate in value. And so when I think in terms of home ownership, I look at it as in terms of appreciation, and what's the cost of waiting. So, if you've got, if you've got family buying, you got friends, or probably just clients coming in, probably most of the time they're going to say, I want to wait till rates drop when I start looking for a house. Okay. So, what's your typical response to that?
Well, if I know that you're telling me that the next rate drop is going to be potentially September 18th, correct?
I mean,
that's what they're saying. That's what everybody is saying in the lending world. September 18th is when the next rate drop, but we don't know if it's going to be 0.25%, 0.5%. We don't really know,
or if it's already happened,
or if it, right. If they're teasing us, if they're not teasing us, right? So I'm telling people, get out there. If the house is out there, write the offer on the house, correct? Don't lock in your rate yet.
Right.
Lock it in after this September 18th.
Right.
If that rate drop happens, then you can just lock it in, right? After the September 18th, because you don't have to lock in your rate right now. If we write the offer, get the offer accepted, you don't have to lock it in right now, because it's already what is today?
The
5th.
5th, yeah.
5th.
Yeah.
Right? So it's usually a 30 to 40 day close on most. So
well, we average 20 days, folks.
Nice little plug. On conventional loans or FHA?
Anything. So
I love it. But my next question is, if the rates drop, in your opinion, don't quote them on it, kids.
Right.
You don't see them come down. You don't see them coming down to 3%, correct? If the rates drop, the Feds aren't going to come them down to 3%.
No, I don't think so.
Okay. By the end of the year.
That.
Okay. And some people question why. So do you have a reason why they would not be coming down back down to that 3%?
Oh, well, I mean, it would be such a drastic change too quick for everything. So let's back up a little bit. And here's why. When I get in these rate conversations, A, they're very boring. Two, I like to use real numbers with when we're talking about rates. So let's say right now rates are about mid sixes, just to use easy numbers. So we're at 6.5. So if you have a client that comes to you and says, I want to wait till rates drop,
Mm-hmm.
you know, they're probably saying, what, I want them to drop to 6.
Right.
You know, it's kind of typical. A half point, if we drop a half point, everybody starts making social media posts, you know,
Right.
they're pretty excited. So, you know, average rent here in Lafayette is about $1,500. So that would afford you typically around a $200,000 house, let's say.
Hey, good information right there.
So I'm going to use just 200,000 because it's easy for my Purdue Ball State brain to do the math on. You know, if you're at 6.5% right now, whether you lock day of, 15 days before, or whatever, you're looking at about a $1,500 payment. Okay.
Okay.
If that rate drops to 6, you're looking at about a $1,440 payment. Now that's with taxes, insurance estimated. That's the whole ball of wax. Okay.
Okay.
So think about that. That's $60. So $60 on a half point drop, people think that's a big deal. And yeah, we want to put more money in your pocket, but at the end of the day, what if it doesn't drop to 6 and you wait? So average home in Lafayette probably appreciates, I think they said last year, 7% ish. Let's go conservative, say it only appreciates 5%. Okay. So you go buy a $200,000 house and the rate, let's say even if the rate does drop, you know, down to 6, but let's say it doesn't. Are you willing to give up that $40 or $60 a month? So let's say over a year, $720 for $10,000 worth of equity. I'm going to take the $10,000 worth of equity. And here's the other point to that. So if rates drop a half point, what happens typically to prices of houses?
Then they go up.
They go up. So normal appreciation is going to say a house I'm looking at right now, it's 200,000, and a year from now it's going to be 210. So even if you end up getting the rate drop down to 6% and buy it next year, you're paying 210. Your payment's the same.
Yeah.
So I think it comes back to when I first sit down with a client or anyone who's talking about rates, it always goes back to budget with me. What can you afford in your monthly budget that makes sense for you?
Yeah.
You know, if you're paying $1,500 in rent, you know, and then you tell me, well, I'm going to do $2,500, you know, in a mortgage payment. One, I have to see if that even makes sense qualifying wise, but then does it make sense at all? You've
Right.
never paid that much. So, you know, look, but at least we can put it, you know, in a range of homes. But the bottom line is if you have a house that all of a sudden is worth 210,000 in a year and you stay in that home for 5 years, you've just added $50,000. Are you going to care about $60 a month or where the rates are, honestly? So that's my point one. So I think to sit down and look at everything, and then I look at controllables versus uncontrollables. You can control how good your rate is. So let's say you want that 6%. I will not buy a house unless it's 6%. So you've got a lot of different options. You can ask for seller concessions, which I think you'd probably say in the wintertime, it's probably maybe easier to get because there's not as many people out there looking.
Mm-hmm.
So the demand's not as high, even though supply and demand in Lafayette, as you know, folks, is very high demand, very low supply. That's what's going to keep prices raising.
Yeah.
So I mean, let's put that out there first. I lost track. There you go. But no. Where was I?
Supply and demand. I mean, and that's true. I mean, the more demand and less supply, that means you're in the risk of a multiple offer situation,
Right.
which can drive the prices up.
Right.
And so at that point, you know, is the lower interest rate.
Right.
When the interest rates do drop, you might be paying a little bit more for the house. So, you know, it's hard. It's a hard decision. And I think affordability is just the main factor for people and trying to just reach out to your lender and find out, here is what I can afford on a monthly payment.
Correct.
What kind of price point do I need to be in? And is that house out there for me right now? And if it's not, that's okay, you know, but just keep an eye out there looking for it, and have your realtor out there looking for it. So thanks, Steve, for being with us today. I
Oh, is
really
that it?
appreciate you. Yes,
Oh,
we got to stop because we can go on and on and on today.
Dang it.
But we will have you back, I promise.
Thank
so if you are looking for a great lender, call Steve. Steve, give us your number and your contact info in case anybody wants to reach out to you.
Yeah, so you can call me at 765-637-9771. You can email me at Stemick, that's my last name, SSTEMICK at myfirstoption.com. My office is right here over by Chick-fil-A and the new Canes that's coming in. So as you're in that traffic jam and you just want to sit and talk about rates, come on over and see me. I like to do in-person visits. I think it's a good way for me to get to know you. So I'm at 114 Executive Drive, Suite D.
All right. And it's always a fun closing with Steve.
Yeah.
So
that's our celebration.
Right. Thanks, everybody. Have a good day.
Thank you.